Welcome back to another trading week, trading days, as well as the last week of the month of 2026. This is a great trading day and looking forward to see some good trade coming along the way on some of the instruments that we will be looking today. Especially I'm focusing on dollar yen and gold. These are two instruments that we are looking at for entries, and we had early one trade on dollar yen and looking for more on XAUUSD as well as other instrument. I hope that traders, you are ready for a big trading days and weeks. So let's begin today's session here, and I hope that all members are here. Say yes if you are here, so I know that everybody is ready for analysis. And beginning with, first of all, XAUUSD. If you look at the gold here, we see that as we started this week as well earlier, it is a significantly bull market. Welcome. Greetings. And it's the first day of trading week, and first day is significantly important. Welcome. And also make sure, guys, give a thumbs up, smash it, and also subscribe to the channel if you haven't done yet, so that you can stay up to date every trade and ideas that I'm going to share in the premium group. Earlier today we had a trade on dollar yen. The dollar yen is in a significant trend. We will be looking at that as well in this market. So looking at, first of all, XAUUSD from both fundamental as well as the technical aspect that you can see in the market. Now looking at here on first of all, looking at the calendar so that we know that exactly where the market is approaching. So if you look at, it's the first day of trading, 26th of January, and from Wednesday there will be quite a few news. But the market, if you look at, it's independent of the news. It's now significantly trending, that you can see there is a significant trend in the market. So in that trending market, what we are looking at an entry in the direction of the trend. So trading with the trend is the most profitable way to trade the market that we are doing every day, right? So if you guys looked at all those trade that opened this week, we had earlier dollar yen trade on Friday, euro dollar also was successful entry, and also on NY session we had XAUUSD trade, also was successful entry. Now all of them, if you look at, we are trading with the trend. So trading with the trend is the most profitable trading system that one can ever have, because when you trade with the trend, either trading XAUUSD, dollar yen, or anything else, all of them, any instrument that you will be trading, either cryptocurrencies, gold, or currency pairs, all of them always give you best results when you trade with the trend. This is what we here learn every single day. Yes, trading with the trend is the key, right? Because when you trade with the trend, you started to see the market differently, and that's why if you look at all the strategy that we are trading based on trend. And so how can you find, in fact, an entry with the trend? This is also we are looking at here in this live session. So live session is helpful. You guys see that this is absolutely helpful, because here trading education is not available. It's very rare to find exact education. You will find that all kinds of education available in the market except trading, right? No one's gonna teach you how to trade unless you're willing to learn as a trader. So from that point of view, if you look at here the live session, we are learning to trade with the trend, and also we are learning how to develop a trading psychology that can help you to build a great trading habit. And trading psychology is 70% of traders' trading success will depends on their trading psychology. So now what we can learn here, the best learning comes from the live learning, right? If you look at the market, you're gonna see that it's a live market, and that's what we are looking here, to trade the market in the live, so that you can exactly know that, because it takes only, if you pay attention, 21 to 30 days to become good at anything, right? Because it's all about building a neural connection in your brain. So make sure every day you watch the live session, look at the market, and also spend some time yourself so that you can speed up your learning as a trader. So now gold, I'm looking at first of all monthly. Now why you are looking at the monthly, because this is the higher time frame. We'll be revisiting once, and then we will go back to the lower time frame for an entry in this market. So this is the last week of the month, and we can see that it's a full body green candle. It's a huge bull candle on the monthly, giving a higher possibility that this market may remain bullish here for the long term. So if you look at the monthly, the overall direction here, this is a non-linear bullish trend, right? So you can see the market is trading above 10 exponential moving averages for an extended period of time. So it's a non-linear bull market. If you look at the weekly, we can see that this is from the weekly time frame here, the market is also showing that bull market. So you scalper, what is have to do with monthly, weekly time frame? Okay, good question. So with the monthly, we are not looking at this all the time. Scalper doesn't mean that you don't trade with the trend. So when you look at the higher time frame, you have a clear understanding about the flow of the market, right? So flow is very important. Which direction the market is, the orders are flowing, regardless of time frame, you have a directional bias. Okay, you know that in relation to the all-time high where the market is, right? So you can look at the all-time high from the monthly clean trending direction, right? And another important thing is that from the monthly, weekly, you can understand the context of the timing. That means when you look at, okay, so this is the fourth week of the month, right? And because fourth week of the month, the market might behave very differently than any other week. Another key aspect that you can use from the higher time frame, what if the market is just at the weekly support? For example, we have seen the market here, right? This is the weekly candlestick pattern. Now the price is at this level at 4988, which is the weekly support. If you go to the 1 minute chart, all right, see, you're not gonna see it very differently here, right? So if you look at, there was a bounce, and also this is the same key level, right? And if you look at, here is also a key level, but this key level is very different from these two. How the market might react with this key level will be very different from these two. We might see the market is breaking through these two key levels, where we might see the market is bouncing off. Definitely I will be, if I see the market has dropped to this level at 4988, I'm going to look at, definitely it's a good, very good buy area, because the market should have at least 100 pip, 200 pip bounce from that level, because it's a key support on the weekly. So we can understand how we will be trading on the 1 minute based on this weekly support. And also there are many factors contribute. For example, the weekly gap open, right? There was a gap open here, and this gap has not been tested here. So therefore, once the market will drop to that level for the first time, we have better understanding of how the market react to this level. All right, so now looking at daily here, with that daily market today, the price opened with a gap, right? And that gap has given also that momentum back to the upside here in this market on the daily, which is showing that the market could eventually break to the upside and can give higher possibility for the market to bounce off this level. Now I'm going to the intraday. Now we are coming to the lower time frame, the entry area. So if you look at off this support, all right, so this is a key support level. From this support, there is a bounce back to the upside here in that market. Now, one significantly important clue that we can look at here, what is that? I would like to ask this question to you guys. So when you look at gold ahead today, bearish or bullish? Okay, so today's gold, we can see that as usual, this is a bull market, and we are looking at entry for going long. Now, though we are looking at the bullish entry, we need to look at the key level of support for that entry. If you look at from here, there is a relationship that you can see of this support level. What's that? There is a very important relationship that you can see from this support level. What's that? Have an idea? So, paying attention is the key. Keep in mind that when you pay attention, anything you want to learn, you need to pay attention. That's where you're gonna get the best results, because paying attention means that you find the details that you need to understand. And so here, if you look at this move, there is a vital information here that can give you an idea of where there is a high probability entry that you can find. So if we look at this 4 hour, because this is it's a trending market, and now in the trending market, the price has created this impulse correction, impulse correction, impulse correction, and here is the impulse, right? So we will be looking at this market to create, it's a series of higher low, and in the series of higher low from the 4 hour, if you look at, this is the starting of this move here, right? Now we are getting to the point where we are looking at the entry criteria. Entry criteria is very important. I hope that you guys enjoying the live session. If you're enjoying, so the YouTube algorithm picks it more. If you're enjoying, make sure you like this stream. we are getting to the point where we are looking at entry. And also, in addition to that, I'm going to look at today's dollar yen trade. Also, I have shared some of the ideas in the Telegram. If you guys haven't joined there, you can join there too for more understanding as well as for more ideas that I am sharing every single day. Okay, now going to this level here. Okay, so if you look at the 4-hour chart, what we can see that there was a series of higher low, right? And with this series of higher low, as this market is in this bullish trend, maintaining this series of higher low. Okay, if you look at here, it's a series of higher low. And with that series of higher low, the market is maintaining an uptrending market structure. Now with that uptrending market structure, if you look at, once the price will be able to break this session's low, the previous session's low, that is where we are looking at potential entry. If the market creates a false breakout of that key level, you're in a very simple steps and strategies for this entry in this market. So if you look at the recent level of support is 5074, which is the key support level, and also the previous level is 5052, another key support level. And in those support areas, the market is maintaining that series of higher low and expecting that the price to break that low and give us an entry. I'm going to now look at the very lower time frame here. So when we are looking at entry, this is key. Again, always look for the previous breakup structure where the market has previously broken out. If you look at here, you can see this is the support. The market had an initial breakout in that area, and with this breakout the price has dropped to that level, and later the market has dropped again to another key support level. In both situations, the market has tested this level with a back-to-back 2 breakup structure that you can see, and both of them has extended below this level. And because they have extended below this level, now breaking below from the same key level can give us an additional entry criteria. So this is the recent 4-hour low, and if you look at here, you can see that from here a break below, in both situations the market has created an overextension below the previous low. Therefore, breaking below to this level is where we are looking at potential entry in this market. That's what we're looking at. I hope that you guys are ready for an entry. Make sure if we enter, you use the risk manager tool and also lot size calculator to find out the proper lot sizing before we get into the trade. So this is the recent high, recent low from the intraday perspective, and also it is aligning with the 30 minutes 20 exponential moving averages, and that's what we're looking at for this market to test and then potentially give us an entry to the upside to create a potentially new all-time high in this market. Silver doing weak move today. Silver doing good. If you look at silver, they are almost, if you look at gold and silver, they are following each other. Silver trend also above the 10 exponential moving average, and along with gold, also silver having significantly bullish trend, right? So because they're a kind of cousin, right? Gold and silver, they are like a cousin, they move side by side. So usually if you see that gold is bullish, silver is going to be bullish as well. Okay, so anyone else trade silver here? Okay, now going to the, why I'm seeing a different chart. Okay, probably we are looking at this one here. Okay, because a little bit of variation in the chart that you see. Now in this area here, that this is a recent support level, and with that support the market is approaching that key level. It formed an order block. We might see what I think a potential reaction back to the upside. Sessions high is here, and this is my current level that I would like to see. You know, the market may do completely different than what we aim to do. Our job is to wait for the market to show its hand, right? The only thing that we have is the control on our strategies, how we can execute. The market can do in any direction. The market can go in any direction. So therefore, we don't have hands on the market. The only thing that we have is hands on our strategy. This is a very, very great way to trade. If you understand that, it becomes easy, because the market will not care or listen about what we think, our emotion, or anything else other than what the market is going to do. So our level that we are looking at the moment is the current support level is here in that area, and here is support, looking at break of that to give us an entry. There is a trend line here also. You can see this is a resistance line. The market can break that high and eventually can still continue to rise, but I think coming down, giving us a further entry opportunity, is the best area to look at. Here you see this is a narrow doji on the 1 minute. This 1 minute doji is where high liquidity. All right, so this is an order block, and that order block is where you can find that entry opportunity, entry criteria here. Welcome. Support, looking for a break below and then to entry. However, we might see even a continuation. If we see that continuation, we will be looking at entry along the way. Now, in addition to what we are looking at gold to look at, also was looking at dollar yen. Now, dollar yen, we had earlier, we see that there is a significant bearish move on dollar yen. And if you look at dollar yen, we had the previous session a trade of this key support level, right? So we saw that there was a break below, and with this bearish engulfers, if you look at on the 15 minutes, has given us that entry on dollar yen. If you look at the overall trend in dollar yen, we can see that the market here on dollar yen crossed the 20 EMA, crossed the 10 EMA, and closed as a significant bearish engulfer. If you look at the daily chart on USD JPY, you can see that this is a gap open on USD JPY, and with that gap open, the market has entirely broken back below. This is also dollar yen left a previous gap here in that area. Okay, so if you look at dollar yen, the market left a daily gap here in this area on dollar yen, and with that gap, as the price left this gap unchecked in this area, where we can see the price now may eventually drop down here to fill that gap, and even can come further downside here in that market. So with that being said, dollar yen may potentially continue to trend here to this support level. So there's a gap open, and that gap open is quite significant because the market, if you look at this red candles, it's highly bearish. And from the 1 hour, and also if we go into the 15-minute chart here, we can see that after the crossover of 10 and 20 EMA, the market tested this level multiple times. Once this important bearish engulfer has formed, we got an entry on dollar yen, and we secured the trade from this level. If you guys looked at, the trade was also shared in the group, and so this is the entry on dollar yen. And this is where, if you look at when the market creates this kind of stronger rejection of this key level, that is where the entry. If you look at here, and now how can you understand this kind of movement in the market early enough? That's the main goal here, is to know that when the market is taking that move, so that you can take and ride that trend straight away. Now, probably you have missed the trade. Have you taken the trade, or you missed the trade? I have shared in the group. Okay. If you missed the trade, that's completely fine. You know, FOMO trade is one of the biggest reason why trader lose money. Now, however, we have more chances now to enter again, because this market is trending. When this is another way to trade the market, because if you look at what important is to pick an instrument that is trending, and you see that that's why if I look at XAUUSD and also dollar yen, and that's what I look at, that which instrument is trending, right? Instead of jumping from one pair to the other, this is always the best practice, is to look for one instrument that is trending. Understanding trend will give you a big friend as a trader, right? It's trend is your friend all the time. It's a simple. Trading is not hard, as long as you have understanding of few important details. Okay, trend, which way the market is trending, and also the liquidity, right? There are three secrets in the market. There is a famous quote from Nikola Tesla. Okay, he's an inventor. If you guys look at the AC current, okay, alternating current, the inventor Nikola Tesla, many other invention. Right? So without his invention, we wouldn't see the alternating current, right? So it's a great contribution. So one of his famous quote, he said that if you want to know the secret of the universe, then think in terms of energy, frequency, and vibration. In fact, it is. If you go deep into everything, then there are only three things left. And as a human being, we also going through the same, right? If you want to know secret of anything, then these are the three secrets of this universe. Because on a fundamental level, everything is energy. And energy flows as a wave, right? So the wave has a frequency. And the vibration is the method of transmuting energy from one, or conversion of energy, right? So if you look at the wave, that's what you will see. If you look at the water wave, have you ever thrown something on the water? So the water will do like that, right? Now try to place a foam on top of that wave. You'll see that the wave will go, but the foam that is floating will remain in place. That means wave doesn't transmute or transfer objects. It's only transfer energy through vibration, right? From one molecule to the other. So therefore, the market, the same. Okay, so if you want to see the actual trade in the market, get into the right time, know the market structure, the most important part, and then find out when the smart money is coming in the market, when there is a liquidity gap, and then look at the price action confirmation. These are the three building blocks of each trade that you can enter, and use proper risk management. That's all trading, guys. Anything that you want to trade. So I know that it's easier said than to be done, and that's why this live session here, as well as everything we are learning in the academy, I'm sharing every details of the trade. And this is our journal. It's very open one in 2026. Okay, and we want to go beyond keeping the same track record. You won't win all the trade. We had some losing trade. Also, we had plenty of winning trades. So that you don't get out with this few losing trade, make sure you do the proper risk management. Use the risk manager tool and then trade with the trend. That's how you can become a successful trader. How many of you really want to be a successful trader? You can share your thought and your reason for trading in the live chat. You can share. When you share, it's become much more easy for you to pay attention when you are trading. Okay, so now with that dollar yen market structure beside XAUUSD, you can see that gold is slowly trying to break above. I'm still not impressed with an entry with gold. We want to see that it has broken enough to the support level. While dollar yen might create an entry opportunity here, this is what I'm looking at. On dollar yen, the recent support is here, and also this is the 1 hour price action closing. The market structure is significantly bearish on dollar yen. So some of the levels that you can keep eye for potential entry is, one of these is 154.42. The market may not go that far. It's a falling market, but if it bounce off this level, break this structure, can give another bigger entry opportunity. We'll keep eye on that. while gold is trying to break back to the upside. All right, so we are looking at here in that area. For the time being, we are looking at this support, but market is dynamic, right? So you'll see that everything is dynamic in the market. You can't fix anything that to happen exactly. We had earlier trade on dollar yen. Both of them. You can keep on the watch list both of them for so that you're having a clear view on that. Dollar yen might create another trade entry because it created a significant imbalance in that direction here on USD JPY. USD in terms of trading instrument, you'll see that some pair trends, some pair move in a sideways, so it varies. So that's why if you have few pairs that you can trade regularly, it's better because the market goes in a trending phase and then remain in a sideways phase for some time. So more often you'll see this happens, that if one instrument is in a sideways, the other is trending. So if you rely or if you trade only one pair all the time, you might fall into the zone where the market is sideways. And trading sideways market, that's what worst thing that you can do, because narrow range means that it's not gonna move. But you can pick an instrument and understand that when it is trending or will be trending, your winning rate will be incredibly high, because most of the traders are able to pick the right trade. The only difficulty is that trade, if there is no volume, if the market is not moving, it just moves in a sideways and goes to the stop loss. You'll see this happen over and over again. So if you look at here on USD JPY, this market now in trend, and that's what we want to know. And another important thing, this is a kind of practice, okay? It's all about, as I mentioned, that understanding when the market is trending. And once you can see those trades, once you can see all the trade in the chart all the time, your brain will get programmed. This is how the reticular activating system works, right, in our brain. we have a filter. You know, when I started my trading, I remember that when I saw that there is in the beginning of the trading, many of you probably are just learning to trade, you see that there is a pin bar, okay, and once you have seen those pin bar, okay, and you can see those pin bar over and over again in the market. That's the very, very common practice that you can see in the market. So therefore, if you look at that, once you can identify a trend in the market, you can clearly see those trades, those trends happening over and over again. And that's how you can reprogram your reticular activating system to see those trades every time when it comes. And that's why it mostly happens even you without knowing it when you are starting to learn those strategies and the trades. So here we can look at this XAUUSD. If you look at this two important breakup structure that you can see, and this two breakup structure, in both cases you'll see the market is in an entry level. So this also another, as I mentioned, when you started to see those pattern in the chart, it becomes much easier for you to pick the trade. If you look at here, you can see that there is a breakup structure, a single drop, and there is another breakup structure, a single drop. So back to back two stronger drop has given you momentum. And if you look at the similar kind of drop, again could give another momentum. Because when you see that a bigger drop to key support level, you're gonna see that higher possibility of the entry. Do you know anyone who can program a strategy? There's a lot of ways you can do that. We have our own developer that helps us to program our strategy, but now in 2026, okay, it is always, you know, now to look at the automated system, right, which is absolutely important. Now in 2026 we are moving towards more of advanced system that can help us to speed up our trading process. So I'm looking at here on gold. If you look at, this is 1 minute, 1 hour chart, there's a doji, and here we can see there is a rejection of this level. Therefore, the bias here, we could see that the market to potentially remain upside. We can see that of this support, there is a rejection coming, and with the rejection, we could see the market to eventually go back to this key level of resistance here. So here is the, if you look at 30 minutes chart, 10 EMA retest, and you could see the bounce of this level. Okay, so here 5 minutes, so you can see a retest of an order block. We might be able to find an entry as soon as we see further confirmation. We want to enter in a high probability trade setup. So if you look at the daily, here I'm again looking at the lower time frame. So there is a higher potential for the market to eventually continue to rise here. So this is a very high potential bull market at the moment. So do you think that gold is going to cross 7,000? It's a bit of far yet, but you know the way the market is heading. How many of you agree with that? I'm posting a poll. Let's see how many of you think that. So I'm going to post a poll. Do you think that XAUUSD will reach 7,000 soon? Say yes or no. And that poll really helps, because let me see how many of you think that gold is going to hit 7,000 very soon, which is, if you look at the monthly perspective, this month's in first 2 weeks, the market already moved to, nearly to 9,000 pips. Okay, so it's nearly to 9,000 pips, and that might, another big candle could cross that 7,000 before any pullback, or we could see that move back to the upside. What's your thought on that? Do you think it's gonna push that high, or before that we could see deeper pullback? I see some votes here. You can share your understanding. Okay, in the meantime, dollar yen, because it's a highly bear market, you want to see the dollar yen is coming for a deeper pullback here in this market. So we're looking to see some kind of, if you look at, this is 1 minute trend at the moment, and this trend is still maintaining its upward movement. The recent support is here, which is the recent order block to this support level. And with the recent order block, we can expect it to potentially bounce. Now, if the market breaks below here to the support, we could see that this market to continue to trend again back here in that area. Welcome traders, welcome back to the live session. I hope that you are enjoying. So if you hopefully not to go 7,000, I think there will be a bigger pullback. Okay, so hopefully not good. Okay, do you think that pullback coming? Anyone on the same notion that pullback is coming before 7,000? 7,000 is too long, but now let's say this is the level at 7,000 now. What do you think, guys? Are you on this move that it's gonna yes, I think we are overdue on a pullback. Okay, so we got two members think that on a pullback. Anyone else on the pullback, or you think that it's going to continue? 7,000 is a long way off yet. Okay, all right, so anyone else on that? Okay, so now, what my experience, pullback is for healthy trend. Now, definitely, if you see any trend without pullback, that's not a healthy trend. Okay, so if you look at the bigger monthly picture here, okay, even with pullback, if you look at now, unless the trend has reversed, even with the pullback, is the market is going to go to this price, that means 7,000 or above. That's an important question, right? Even with pullback. Usually, if we look at, if you look at the historical perspective, let me show you, because anything that we will be looking at has to have some kind of a reference to it, right? That's where the actual factual information comes in place. One thing that we can guess, right? We can say that, okay, this is gonna happen, this is not gonna happen, right? Another thing that we can use the past data and the future, the factual information, to understand that what might happen. Firstly, let's look at the fundamental, because the bigger picture trend is mostly driven by fundamental, right? Looking at here on the fundamental perspective, so with the Fed rate cut, right, coming up, it's a big question, right? What I have seen that so far, the information that I have from different sources that we can see here, is that there is a potential for rate cut in 2026, right? At least three times. So future is future, but what has been predicted. Now, if there is a rate cut, how does that influence gold price? First of all, we need to know this is the future fact, and then we will be looking at the past technical fact. We got an idea. So how does the rate cut will be directionally influential to gold? Because fundamental, we think that fundamental is a very complex thing. You need to understand a lot of data, economics, microeconomics, or general. But the fundamental, if you guys looked at, if you were in the course in the academy, I have also separated in a very simple way to understand the fundamental, because every trader needs to know that. And if you read books about the economy, it's gonna be very difficult as a general, as a retail short-term trader, even as an investor. So the simplest way to understand the fundamental is the rate cut. I don't want gold to go 7,000 soon. My point of view is that people so we'll be going to that pullback. But if you look at the overall fundamental, right? So that we are discussing about the rate cut. Now, how the rate cut creates the move in the gold. Right? How does that influences the gold price? Now, rate cut is about, like, if you look at the Fed rate cut, if we look at other currency that for them, but if we look at the dollar, then with rate cut, that means there will be more borrowing, right? Rate cut means that the rate is lower, so there will be more borrower. When there are more borrower, okay, there will be a lot of borrowing, and because there will be a lot of borrowing, how does that influence the dollar? It eventually devaluate dollar. Okay, so it's a very simple way, because the more borrowing, there will be more inflation. Okay, even the inflation is in control, but still there will be a lot of liquidity or the buying capacity have because of the borrowing, right? And so that will eventually drive the gold price to the upside. That's the simple formula, right? So when there's a, on the other hand, rate hike will reduce the gold price. That's the fundamental simple way to know. Now the reason is, if you look at the product being, for example, the food and most of the things, mostly limited availability, but when there is a more borrowing, there will be more, the market will be more liquid, right? A simple way. And so how does the bank find those money? The print, need to print, right? There will be, when there will be deficit, there has to be printing, and that printing will bring the devaluation on the currency. So that will eventually increase the gold price, right? And therefore, 3 steps rate cut will ultimately, throughout the year, will push that gold price up. With the dollar index, we can see that so far bearish, right? So we can see from the technical, we look at the technical analysis on dollar index. This is the dollar index. There's a gap open, and we can see that from the weekly, this weekly price action that you can see on dollar index is highly bearish. There's a gap open, massive bearish move, so which is also reflecting that technical aspect in the fundamental aspect in dollar index. So therefore, if you look at gold, that also showing that there is a potential for upside, but there is a, if you look at the pullback, is a natural part of the market movement. So you'll see that the market will move, there will be pullback, market will move. Okay, so now this is a long-term picture, but the short-term, there is definitely have a very important implication of, as a short-term trader, understanding the long-term picture, is that most of our trade that we will be opening in the direction of the major trend, right? So this is this, when you understand that this market is a long-term bull market, is eventually there is a higher probability that this market will remain bullish. So therefore, we only look for buying in this market most of the time, unless we see, sometimes you see there is a stronger pullback, right? You'll see market goes for an extended pullback, and yeah, we can look at, if you look at the daily, so to trade the pullback, so far in this whole move, the only zone that I found to sell in that zone on a pullback, if you look at, otherwise there is one day there's a big drop, and we can wait for that kind of drop to happen, and then the market reverse. Whenever there was a big drop, 1 or 2 days, the market reverse. So we can use that drop as an added confluence to go for further long, right? So if we keep our entry always in the major direction, that gives always an added advantage, because as a trader, we make mistakes. I make also mistakes. Everyone makes mistakes. But when you can enter in the major direction, in the flow, you always be in the zone of the major flow. So in that case, if your entry is not correctly directionally aligned, if your entry is if your entry is aligned correctly and directionally, even if your entry is not in the right place, still you have a possibility for remaining in profit. I don't want to see gold to go 7,000 soon. Yeah, 7,000, it's not gonna, definitely not gonna go that far soon, but in a long-term picture, what might happen? So this is what we discuss about the fundamental. Let's look at the technical aspect from the based on the historical perspective here. So look at the historical implication. So you guys looked at, do you see these two candles? Can you how many of you remember these two candles, how they're formed? These are the biggest move, volatile move in this whole year. It's a crazy move during that time period. Okay, so this is pandemic candles, right? During the pandemic, there was a massive up and down. The market was crazy, big move. If you look at also probably this one, this was the war candle. I think this one and that one, both. Now, as the market, if you look at the way it is heading, it might suddenly break out very aggressively to the upside, or we could see pullback very strong. And if there is a pullback, if we look at, then the pullback can be so fast that you could see 1 or 2 days or 3 days big drop and then again bounce back. So now from the technical, we can see that this kind of move happens when there is a very uncertain geopolitical or economic situation around the world. All right, so now let's look at here in that area. If you look at this is intraday, we are looking at as a short-term trader. Therefore, we have a directional bias, right? And with the directional bias, we are looking at that entry. So with this break back to the upside, we can see there is a another move in that market, and here with this doji formation, the price action is showing that there is a possibility for an upside bias here in that market. There was a pullback at 3500 and 4380, 5300. Now, when it comes down to pullback, there is, you'll see that the pullback can begin at any point, because in a trend, this is another, I would say that paradoxical is that in a trend, it is very, like, you'll see that you can identify a pullback when it is over. More often you will have some understanding, at least having a clue that okay, this is end of pullback, the market may start to trend again. But when it will start the pullback, it's very difficult, almost impossible to know, because the market will remain in a trend before it start to pull back. But when the pullback is ended, starting up a new trend, more often you will understand. For example, look at the previous Friday's candlestick pattern on the daily that I'm looking at. If you guys looked at the weekly forex forecast, I would say that this is a very, very educational. If you haven't watched the weekly forex forecast this week and the week before, where I have discussed everything, and you can go, this is where the daily, you can see back to back 2 daily dojis where there was a significant rejection of that level. So it is a very good sign of ending a pullback. So you can see the market, in fact, what happened? The market started to bounce off the level, but as the price is moving to the upside, it will keep moving until it start to pull back without any sign. More often you'll see that. So the pullback can happen at any point in time, but as long as the market is trending, we are trading with the trend. All right, so here we can see with this break, the market had initial drop to the support here, expecting it to come back down below further, and we might be able to find a potential entry after break of this low here. You see, this is a false breakout. It was showing that the market might go up, but it just got rejection. So this false breakout is basically bringing that market back again to the long-term support level. We might be able to find an entry here, because if you look at as the session open coming in 30 minutes time. So looking at also the dollar yen here to see where the market is approaching. Trader, welcome. Who creates a pullback? Smart money coming in with huge volume. Good day, sir. Also, can we retest 5052 level, break down structure to that level and then start a bounce? Okay, so firstly, who creates a pullback? Now, first of all, we need to know that, in fact, what is a pullback, right? Now, the pullback is not by taking a trade. It's by taking out a trade more often. So if you look at how does the market move, the market moves. If you look at a trend, so when you buy in an uptrend, the market goes up. And the natural rhythm of the market is that it's not gonna move in one direction. It's gonna go up in an uptrend and there will be a pullback, which is in a healthy trend. Now when the buyers bought, there will be a move back to the upside, right? Now buyers means can be any buyer, can be smart money, can be retail trader. It needs volume because the smart money has a bigger volume, so you say the smart money. Now once the market gone enough, that means the price has bounced enough, there is profit taking. That profit taking brings the pullback. Pullback means basically it's profit taking cycle. Because when the buyers bought, the market has gone up. When the buyers close their position, the market gone down because the buyer's closing is a sell order in the market. So the market dropped, and that's a pullback. And again, you look at the market, the buyers buy again and it goes up. Okay, so here we can see some kind of price action that might create an upside bias. No, I don't think so. There is a possibility for further downside here. So I'm not entering it. How many types of pullback can be? I don't know any types of pullback. I know that it's a pullback. deep pullback, shallow pullback, that can be a type, but pullback is a pullback. Do you have any types of pullback? Anyone has a different types of pullback? As far as I know, that pullback is when, if you want to bring the Fibonacci, then minimum Fibonacci pullback 38.2%, and then 50%, 61.8%, which is the golden ratio. Usually, there is no specific scale that you can look at for a pullback. As long as it's maintained the market structure, it's a pullback. Right? So the pullback can be the whole length. That means it from where it started, its move, it can come back. It still can be a pullback, and then bouncing off that level again. So if you look at market gone up and then come down for a pull, this can be a pullback. It can be up to here, the pullback, and then can still go up depending on how the price action is being formed. Usually the pullback candles become different than the original move candles. And pullback is needed for healthy trend. Why? Because if you look at the smart money, as we trade based on the smart money, and in a smart money system, they cannot, like as a retail trader, we can buy or sell at any level, at any point, fastest way possible, because we don't have to wait for someone else to take the order on the other side. Instead, if you look at, you don't have to take but the smart money cannot place their order instantly that the way we do, because of the volume. The order needs to fill. So the reason is, whenever they buy, the market goes up, and when the market goes too high, then it's not profitable for them to buy, so they wait for the pullback to happen. So that pullback means that there's a profit taking. The market, the sellers, along the way, there are some sellers also sell, and once the market does that pullback enough, it's ready for another move. And that's where the smart money, usually you'll see that trade the market. All right, so now how we can use that information is to understand the trend, understand the pullback, and then trade with risk management. Okay, here the way the market is forming, see there is a 5 minutes pin bar. There's a higher chance for further downside here, and looking for an entry, while we can see the dollar yen, also the market on dollar yen is showing also deeper pullback, as we discuss about the type of pullback, deeper pullback, shallow pullback. That some of the types that you can look at for an entry. So here if you look at, it's a bearish setup, bearish market structure that is creating. So at any point we could see the downside here further, and then from here we might see the market to eventually bounce off that level. We can see here a significant drop, and as the market is approaching this support level, we might see that the market eventually break further below here and coming down to retest and then to reject back again to the upside here in that market. With this doji, the market after this support test, we might see that the market to react to that level, and going to delete those levels to see the new area of value. Now if you look at this, the 1 hour candlestick pattern, the market is approaching a key support level. There is a this break in fact potentially bringing more liquidity for another potential bounce off this level. So don't you think that the market might bounce off this support? This is the recent high here. There's a breakup structure, there's a drop back below. So if the market reverse, we might see that going back up to hit that 5096 level. So here we might be prepared for possible entry from the 4 hour sessions low is here, and I'm preparing for a potential entry here. Let's wait for the market to show up a little more deeper drop here, and all right guys, ready for, there is a possible move back here to this nearly to 120, potential 125 pip, and also there is a, so I'm still not entering. We want to see that clean rejection and the reaction of that level. getting late our entry, or I would like to wait a little more time. There might be rejection of this level. But the 15 minutes is a big red candle. So the 15 minutes showing the downside. Can we break to 5052? 5052. See that here. Look at the 4 hour. There is possibility because this green candle that you can see is the previous swing low. So series of higher low, and once this series of higher low is broken, there is a potential for downside, and that's gonna be an important area that we can look for buying. But I think 5074, even off this level, the market can react. Okay. So because there is a, if you look at head and shoulder and false breakout, and in this area here, if you look at in this whole zone, this is entirely a bearish fair value gap that you can see. And with that bearish fair value gap, the market may come back below here to this support level. Okay. So that being said, we might see the market to come down here for this weak fill in that area. All right, so let's wait to see that where it is heading back to. So in dollar yen, we can see there is an initial bounce here in that area, and that might taking this market back above here to this key level. So here, if we look at after creating this double top, the market has, with this double top formation, the price slowly trying to create an imbalance in that area. And that imbalance could, if we look at, this is the lower time frame, expecting it to break above here to create a new higher high. And so with this 1 minute rejection here, there is a potential for short-term bearish move. We might be able to find an entry if we see enough confirmation for a move back below here. Though the market long-term trend is bullish here, there might be a retest of this support here now, and I'm waiting to see the market to break that low. If you look at the 1 hour, this is where after the previous 1 hour doji, the market of this support getting the reaction back up here. So therefore, in this lower time frame, there is a potential for an upside bias here. Alright guys, so hope that you're enjoying the live session. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Stay connected by joining the Telegram. I do share many of my trade ideas. That today's trade on dollar yen also I have shared in the group, where you can also enhance your learning and growing as a trader. Okay, so in this area here, the market with a multiple liquidity sweep here showing up to be, okay, so it's getting that reaction back below, and The recent support is at 5074 and 77, where we're looking at the market to potentially retest and react back again to the upside. I'm looking at an entry in this area. So as the sessions open coming, if you look at, there's a session opening and a session open. So 1 hour candle closed with a long bearish candle. That drop might bring that market a little lower, and still I will be looking at bullish entry because the market is overextended now below, and there is a higher chance that the market will have a reaction back up here in that area. Feeling bearish FVG to 5052 seems like a good area to buy from once it managed to drop there. Yes, if you look at that on the lower time frame, this is the 5-minute chart, and this is the market has a very aggressive move of this support with 2 impulse, it gone back, and then the market consolidated. So there is a higher chance to fill that zone, but at the moment, because the major trend is up, we are looking at here for the deeper pullback before we look at that entry. It may, as I mentioned, when the pullback is over, at any point you see the market has formed the reversal and it started to bounce up. So we will be taking that return trade back to the upside in the direction of the trend. That's our main aim here, is to look for the trade to take in the major direction of the trend. So if you look at this, the 1 hour price action, I just tested the 1 hour support and we're looking at that entry. Now, if the market breaks below, as one of you have said, it is possible to come back 5052 where there is a 1 hour 20 EMA and also the previous support. That's going to be a huge area for buying again. Now, this is a confusion area. The market may drop to that or may not. So that's why it is, if it drops down here, it might straight drop and then bounce off that level. So you are looking at that area, right? So in the meantime, we can see there is a upside on dollar yen, which is basically moving back again to the key level and expecting dollar yen to retest and then to reject back again in the direction of the trend. So it has broken that low here. Value market for joining fee. Okay, so here we can see the market slowly building up that momentum, and with this long wick rejection, what do you want to see the market to test that low and then return again back to the upside here. So learning to trade, that I think someone will ask why most tradable. Okay. Trading you need education, right? You need to learn to trade, and there is a lot of, this is the most, have you ever got any that even in the public education, if you go to the university, you have to pay a tuition fee, right? Go to the international education. Can you go to other university where you will be given free of charge? No. Any education is not free, right? So because the teacher spend his time to teach you, you have learning resource material that you need to learn. Nothing is free, right? Someone will teach you, someone will give you mentorship, someone will give his long experience to you, and how can you expect it to be free? Because then that person, why he is spending his hours, days of time, even he is making money from market, because anything given free doesn't have any value to it, right? Absolutely free is needed to help the community, but there is a I think it's a poem that I read when very early. Okay, so this is how anything to find something premium, that you need to look for the premium, right? So that's what it is, because trading education is really hard. Trading is absolutely hard. And I had time when I mentored some students who I spent plenty of time to help them to develop trading psychology. It takes a lot of effort to mentor someone. Okay, so we go with the monthly and weekly trend. Now we, depending on what time frame you are trading, right? So if you look at the daily trend, right? If you look at, this is the daily the market, right? So in that daily market, where depending on what time frame you are trading, it's the most important part, right? Now we can look at the monthly, weekly, and daily trend. These are the three main time frame. Usually for trend you can use daily, but monthly, weekly is mostly you can use for support resistance. Because if you look at the weekly, now that this is the weekly high, right? And this is the weekly low. So two key level of support that you can see. Now if you look at the monthly, also the same thing. From the intraday, here also the same thing. So looking at that area, we can use the multiple time frame for that. And in this area, if you look at, guys, you can see that there is a breakup structure and could bring that market back up here. All right, so now to understand the bigger trend, to understand the bigger flow in the market, it is essential that you look at the multi-time frame. Multi-time frame will give you Sui scalpers boss. No, we are not going with the monthly and weekly trend. Okay, so you can look at the daily trend and be a scalper, but when you look at the monthly and weekly, you have the directional bias. Okay, so if you look at only daily, for example, you can see everything, right? But those levels you won't be able to see on the monthly and weekly. This zone here, this breakup structure. So weekly, looking at where the market is in relation to the monthly and weekly, will give you the extent of the over extension. The market is always, you see that at some point it's gonna overextend and will reverse. So some of the ideas, because looking at bigger picture, imagine that you are looking at your house from the top of the tree. You can see the roof and everything, right? Go a little higher, you can see a bit more detail. And go a little higher, you can see your backyard and everything. Like the higher you go, the clear that you can see the direction in the market. All right, so here is lower time frame price action of this support having the rejection back again. Welcome. Now, a little complicated market structure at the moment. You can see the price has slowly broken out of that. Now, if the price is coming back here below, right, and so it came to 5066, we were waiting for the further downside, but okay, now with a long wick rejection here, this is the high of this move. We might see now potentially a rejection. So if we see that there is a confirmation of an upside, we can look for going long. But before it goes up, there is a higher chance for another wave of drop, and that we can take that as an entry for this possible bounce back here. Now looking at the 15 minutes, this is the 15 minutes high here, and there's an inverted head and shoulder. So there is a blur between day trading and scalping. Okay, there is no rigid rules that scalper trade like that, day trader. There's a blur. The goal here is to find a time frame that suits your entry criteria. And before going in any entry, when you have all time frame, especially the major 3 time frame in your mind, that which way they are flowing, it's gonna give you a really big understanding of the market direction. That's why I always keep this 3 time frame in my head: monthly which direction, weekly which direction, and daily which direction. So the advantage of looking at day, weekly and monthly, firstly, you'll have every 5 days there is a new week, right? There is a new weekly candle coming, and the first day of trading week, last day of trading week, the first session of the trading week, last session of the trading week, they are very, very identical and very good session for trading. Have you ever traded the first session of the opening, the last session of the closing? During that time, you will see that the market moves very predictably and with trend. So these are very good sessions for trading. That's why But if you look at only daily, that you don't pay attention to the weekly, you won't be able to see those zone and how the candlestick pattern form around this area. In 2008, no, I haven't. That time I was studying. I just finished my graduation and haven't even never thought of trading. But 2008 was big. This comes in a cycle, right? So 2008, now 10, almost nearly to 20 years passing, right? It's kind of, it is a cycle, right? Everything has a cycle. Not only that, everything, economic cycle, historical cycle. The empire, if you look at 5,000 years ago, what empire were in this earth, right? If you go 5,000 years back, you're gonna get the Egyptian civilization, right? There's nothing else there. So it's a cycle that runs one after one after one. It's called the natural rhythm, right? The creation of the earth that you can see also has a cycle. So if you look at this is sun and the earth is here, like it's like a cloud, but it's emitting constantly energy, right? Sun also emitting energy. So at some point, when it will lose energy, collide into the sun, and it disappear. But there is another earth, of course. Otherwise, there won't be any continuation of life. What did you study, sir? In graduation, I'm a civil engineer. But I'm trading for a very long time at this. Okay, now this is currently the market is on that support. Looking at, okay, with that break, it's coming down here. Right? With that move, we could see the price to eventually drop down back below. Head and shoulder in 1 minute. Let it be a little bit. Okay, so it as 5052 looking that the market is heading to that level. Still a probability to go to 5052 or not anymore. Still, it's still on a downtrend. We are looking at until we see that drop back below in that area. Patience, guys. This is where the market is on a downtrend. Now we can look for sell entry, but this is a very sharply uptrending market story. That's why I'm hesitant to enter sell trade. There might be a drop, but at any point you see that the bounce could be very stronger and might get stopped out. So that's why I'm waiting for the market to come back to that key support level and then to give us that entry opportunity here in this market. Okay, so here it's creating a downtrending market structure in the daily, and that might bring that market well below here, and you could see the price to come back to that support. Are you going to look at sell? I wouldn't, because chances for coming down to this and then to reverse, or we could say at any point to have a reversal, because if you look at this doji here, it's also tested this order block here. This green candle is an order block here. This market can still drop down, or it can bounce off this level. News in 2 minutes. I don't think any high impact news. You see, look at the calendar. Today there isn't any high impact, but might be low impact. What's that? But if we look at the news here, Okay, here with this breakup structure that you can see the market slowly bringing that back below here. So the market trend here, we can see that maintaining its downtrend, and you could see the price to eventually breaking that low here. Okay, so some of you are very highly predicted that movement is coming to 5052. Now we will be looking for potential buying of this support if the market drops with a stronger momentum, but with proper risk management, of course, not going with any unusual risk, of course. And okay, so approaching that key support level where to enter buy trade, you want to see that a clean reversal confirmation here. And what I think, once it's gonna react of this support, we could see the market going straight back to 5096 or even 5100 level. All right, so it's getting potentially ready. We will be using the pending order. If the market drops well below, once the price will reverse back to the upside, so that we can get in the trade early. There was a significant amount of sideways movement that we can see in that area, and with that sideways movement we could see the price to come back here to the support and then we back to the upside again here. So because there was a sideways market, liquidity gap could drop further downside here in that area. All right, so for an entry in this area here, we are looking at for the price to show up that level, and from the 1 hour still in this area, still it is showing bearish market structure. Okay, so the market structure is forming and there is no high impact news, so therefore this move that we can see could eventually drop that below here, and Okay, now this move we can see here can continue to move, or it's almost came to 5054. I think still downside possible here. And if we go for short-term entry for downside, then there are some imbalance here, we can use it for entry. And the 1 hour candle close, so it may eventually continue to rise. Okay, this might be a reversal. Now if we confirm that this is a reversal with a one rejection candle, we will be looking to go long here for this possible move back above to 5100 level. Ready with risk manager tool and all the things that we need here for that entry. Okay, so here which is smaller candlestick pattern, the market may bounce off that level. Okay, so here is having some reaction back above. This is a potentially bullish price action here. in that area. So we will be looking for entry on a proper price action confirmation after we see the market has done enough pullback here. So here I'm going to place a pending order above this high, which will be a buy stop order. If the market breaks above, then we will be on the trade with tight stop loss, and we will be targeting to this level here, and we might be able to extend if needed. Now this is a buy stop that I'm placing at 5072.76. So I placed the buy stop order here, and also I've shared the same trade in the group as well. So expecting it to reverse off this level. If the market goes up, we will be on the trade, and stop loss below this low. I'm on the trade, active, and wanting to see that potential break back to the upside. So buy trade running on XAUUSD. Now we didn't enter because the market was still trending below. We want to see the confirmation of a change of trend. This is where we have seen that there is a potential. There is nothing confirming trading anything. The market can do anything, but we want to see that the trend is up before we look for any buy entry. That's the simple logic. So we want to make sure that it's an uptrend. Even the market trend changes, that's on the market, but our job here is to make sure that we are trading with the trend. So until this level, it was in a downtrend. Now the market trend changes to an uptrend. So we are now trading with the trend. The rest we have to leave it on the market. All right. So that's how trading is. Simple logic, guys. Trading with the trend, buying after a confirmation of a trend change. But at any point, the market can still break below further. There are many fundamental factors, news factors, many things that contributes to the movement of the market. Right, so it's a tight stop loss If the market breaks below, we'll be out of the trade. If the market goes up, then we are on the trade. Okay, so that's what we will be looking at. Still can come back down for liquidity sweep here. So USD JPY, you can see that after this pullback, also this market slowly breaking down back below again. And this market also made trend down here. Want to see a bounce back here. And awesome, we are up here, and this is a very tight stop loss trade, so we will be running as soon as we will be running enough profit, we will be taking out of the trade. But first, I'm still holding on to that. We are up to 26 pip, 29 pip, 30 pip, and as soon as I will close, I will just letting you know, guys. So it's pushing that back up here. Unfortunately, if the market breaks below, expecting a rejection of this level here. preparing reaction. One advantage of tight stop loss is that if the stop loss hit, we will not be losing big, only few pip, and then we can recover it in the next trade straight away if that happens. Might not hold it. Got out here, and we'll be re-entering again with the next entry. So the 15 minutes candlestick pattern that you can see, so it's just tested the lower shadow, got reaction back again just off this support, and for us to be able to look for, you see there is some kind of rejection coming off this level, the stop loss that we place here. If we re-enter, we will be entering by the market in that area, and so I'm going to re-enter this trade from this level here, stop loss keeping at 5062.45. So 5062.45, and take profit target in the same level that we had in our previous trade. There is significant rejection here. Before I enter, it just start to drop, so I'm still not on the trade. We'll be waiting to see. Couldn't enter, guys. This is a faster move that happened. we might see that so with the head and shoulder, it entirely broken below, and just too fast. So we'll be looking for, I think it's gonna potentially break this low here, and with a retest of the 20 EMA from the 1 hour, we might see that the market to reverse again back. So currently enter here, so we'll be waiting to see how far. Back to back 2-3 liquidity sweep here, that's showing that the market may come here for this retest. Okay, so here with this I'm looking at the potentially the recovery trade here, as if you look at tested this support, once it reverse of this level, you'll see that eventually moving back to the high. And sometimes the market will move without any proper directional bias. Here is what you can see, that with this support the market is slowly creating its rejection to the upside, and you're going to sell off here or going to go long. I think it's both directional move is still open, and the buyers still looks weaker here in that area. So the buyers still looks weaker, and we might see that of this level market structure became little narrower in a side way, and this 5 minutes price action here showing that potential for a move up, which is a higher possibility. Now okay, in that area it's creating a bullish pattern, and if we look at the overall move that we have taken in this area, it's potentially to slowly building that momentum. You see there's a 15 minutes bullish price action, and We'll take another chance here for the potential upside for a long entry of this support level here to this resistance line, and this is a buy by market entry with little higher stop loss. So definitely risk management is key. If your account is small, probably better not to open. And here okay, so you open I open buy here, it's running, it's a buy by market, second trade with potential for upside. All right, so we'll be waiting to see that how far it's getting back above here. And if it breaks out, it's gonna boom, bounce back to the upside. the market has created significant imbalance in that direction, so I think less likely to range if the market breaks out here, because if you look at, there is a double bottom, there is a higher chance for bounce off that level. Let's wait to see where it is going, but risk management is key, as I mentioned, and there is a rejection of this level. Now, as the market can do in any direction, where we are looking at potential reaction we'll see that where it is heading. And might be entirely a liquidity sweep here. I think it's getting momentum, potentially. Okay, so this 5 minutes candle is quite significant, because if this one is closing as a long wick, there is a higher chance for another potential bounce, depending on how the market structure is want to create here in that area. And series of higher low, there is a potential for yeah, I'm holding on to that, guys. Alright, so it's becoming interesting here. Right now, gold will go further down. Very okay, so this is gonna be really like, you know, it's the market is a puzzle that needs to be solved, right? USDJPY is having a reaction here. There might be, now as I mentioned, USDJP has done enough pullback and the price has reached this key level, getting the rejection back again here on dollar yen, and could continue to drop here. Right, so the market, so we'll go further down. Okay, now the thing is that it can go down, but the probability here is upside. Now keep in mind, traders, trading is all about probability. Okay, so there are two kinds of probabilities. One is what you guys see, that the regular probability. There is another one, it's called the quantum probability. We ever thought of quantum probability? The higher the probability you are leaving at, higher the chances of happening. So the quantum probability also, if you look at, now we need to think about the quantum probability rather than the regular probability, right? All right, so here the market has broken out of that level. You could see the price to go back here in that area. Okay, we'll holding on to that, and I want to see the price to go back here to 64 pip. We are up, and we want to cover the previous one's loss, also the new profit potentially in this move. Okay, it's pushing up and I'm holding on to that yet. We are waiting to see. How many of you are running this trade? Say yes if you are running. Now look, the market, we are on the side of the upside trend, holding on to that. Can go down, but we are on the, as I mentioned, the probability. And the probability is the key to become a better trader. So with that up, also we discuss about the quantum probability. What's the quantum probability? Quantum probability, when you know that, you can understand that the entanglement, right? So entanglement, these are some of the things that even never touched in regular curriculum at school, because you know why? Because that creates a counter understanding of how we see everything, because it's not available on the regular. So you can, if you are using, let's say after few years, quantum computer, then you can use quantum probability as well. The quantum probability is based on the entanglement, right? So if you look at something that you have has an entangled probably trillions of light years from here. At the same time, if you are a winner, that can be a loser. The opposite directional movement, everything, time also. Okay, now here what we can see in this area, that the market pushing up and we are holding on to the trade, reviewing that entry. Are you going to hold? I'm going to hold on to that, because still there is a possibility for this market to push back to the upside here. And currently we are up on that to 65 pip. Do you think we're gonna keep it, or you wanna run it now? This is one of the limitation of most of the trade. Market again try to reverse back, but I want to take a little higher profit target here, because it reverse. There is a chance for this market to eventually move back again. There is, if you look at this, is the 5 minutes pin bar. Okay, it's a sharp rejection, which is an order block. But you guys have seen that I have posted one small video, that means the shorts, about the order block. Have you watched that? That's gonna change the way you look at the market. Here we see there is a 1 minute bullish engulfer. Now this is what the probability. You see that now probability is showing that the market could bounce back to the upside. Probability doesn't guarantee something will happen, but it creates a higher chance of staying in this direction. Okay, so that means that if something happens repetitively for 1,000 times or 5,000 times, what is the chance of head and tail? That is probability. Okay, we see that there is upside, and okay, so look, there is a, if you guys looked at that, being a trader as a humble being is very important. We can be right or wrong, but not being too confident as a trader is very important. Confident of your entry, but not in the being so like that. Okay, it's gonna, this is certainly will happen. That's not gonna happen certainly. There's no certainty. In fact, our brain craves certainty. This is how the brain is wired. But as a matter of fact, there's no certainty for anything. All right, so here we are now up on nearly to 100 pip. Okay, it might come down for pullback, or we could see that continuation back above further. Depending on where we entered, I am exiting the trade right now. This is trading is patience is probably both P, right? We are almost nearing to the end of this live session. It was a big session and it was a successful session. I believe that you enjoyed this session, and we had a successful entry and successful profit taking for this session. I hope that you guys enjoyed. And this is the first day of trading week. Still have the whole week to go. The last week of the month is always exciting, right? So with that excitement, and I invite you to join every single day in the live session. After this bit music, we will be ending this session. I'm still trading throughout the NY session, and we will be keeping you posted, guys, on the channel. So if you are on the Telegram or in the any other areas, you can join there. We will be looking forward to see you there again trading live. Until that, stay well, stay happy.